Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the segment, we have Jay Jog, co-founder at Say Labs and former lead developer at Robinhood. He joins me to discuss trending topics in crypto regulations such as staking, stablecoins, and other new dimensions of the ongoing conversation. Jay, it's great to have you with us. Welcome to Trade Talks.
Awesome. Thanks for having me on, Jill.
You got it. Tell us about Say Labs and why it is the hybrid middle ground between legacy TradFi and the emerging crypto world.
Yeah, so I guess as you mentioned, my background, I spent time at Robinhood. So I spent almost 4 years over there. I saw the company 10x, and I was an engineering lead when the entire GameStop saga happened 2 years ago. As you can imagine, that was handled exceptionally poorly from Robinhood's side. One of the biggest reasons is because there was a complete lack of transparency internally. And that made me much more of a decentralization maxi, because anything that happens on chain is inherently trustless and transparent. That's why we initially started building a decentralized Robinhood. This led to us looking into the infrastructure that we could use to build an exchange. That's when we ultimately realized that the infrastructure for exchanges is lacking. And we don't think that the solution is to keep iterating on exchange mechanisms. Instead, we think that you need to do a rewrite of the underlying infrastructure, because that's how innovation typically works. If you're familiar with the idea of application infrastructure cycles, initially there's some infrastructure that gets created. This leads to new types of applications that are enabled, and then you need more specialized infrastructure for those use cases. One example would be with the database industry. You started off with solutions like Oracle. This then led to more specialized applications like the Web 1 and Web 2 applications that we use today. And then there's tools like Databricks Warehouse getting created, which are tailor-made for AI and ML. We think the exact same thing is going to be happening with blockchains. We started off with Ethereum. This led to a lot of decentralized exchanges and decentralized applications that were created. And now we're starting to see the need for more specialized infrastructure for exchanges. That's exactly what we're doing over at Say. We're building the best infrastructure for exchanges. And if we succeed, then the decentralized exchange trading experience will be identical to that of the centralized exchange trading experience.
Right. And Jay, in addition to the infrastructure, getting a proper regulatory framework is necessary as well to continue to advance the space. Tell us about the 4 principles for crypto regulation.
About the which principles?
4 principles of crypto regulation.
Yeah, so I mean, in terms of crypto regulation, the way that Say thinks about it is, what we're starting to see right now is there's much more of a push from the SEC and from regulators around just making sure that centralized entities are behaving properly and protecting their consumers, right? So last year we saw that there was a lot of, honestly, not very good faith actions by a lot of actors. For example, the FTX saga would be one of the most prime examples of that, where billions of dollars of customer funds were stolen. So because of that, we're definitely starting to see much more involvement from the regulators and from the SEC around just making sure that centralized entities that can otherwise act in opaque manners are going to be regulated so that customers are protected. And overall, I think this is a very good thing for the crypto industry overall, because it's a sign that the industry is maturing. And I mean, short term, it's not going to be great. Like very recently, there was the news that Paxos the SEC is considering action against Paxos for their BUSD stablecoin. And overall, that's definitely not great for the crypto industry in the short term. But I think in the long term, this really emphasizes the need for having decentralized applications and decentralized finance, because a lot of the issues that the SEC has is with decentralized actors and centralized entities that can be performing things in a negative manner. So just this focus on decentralization, I think, will end up this being better in the longer term.
And Jay, I understand over 120 projects are committed to launching on Say as part of the mainnet. And one in particular you'd like to highlight is with Sushi. Tell us more about that.
Yeah, of course. So Sushi is one of the biggest exchanges that is there right now in decentralized finance. And Sushi had one of the largest TVLs, so total value locked in crypto, up until very recently. And last year they had a change in leadership, and their new CEO, Jared, was extremely enthusiastic about expanding to new ecosystems and launching new products in these new ecosystems. So we got in touch with him last year. It seemed to be a very clear way that we could collaborate with him because he wanted to launch multiple exchanges. And that's when we introduced him to Vortex, which is one of the projects that is building on Say. And ultimately, Sushi ended up acquiring Vortex. So now Sushi is going to be launching the first fully on-chain perpetuals exchange that is also supporting cross-margining. So no one else is doing that right now. And that was actually the cross-margining piece was one of the reasons that FTX was extremely popular with traders back in the day. So yeah, we're extremely excited that Sushi is coming on, and we're going to be their strategic launch partner heading into mainnet.
Right. Exciting news for sure, Jay. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Awesome. Thank you, Jill.